Oil has rebounded today from the lowest close in more than 2 weeks. The sudden drop in price has been referred to as a mystery. Today I'm joined down the line by Robert Montefusco, commodity broker at Sucden Financial, to discuss the factors affecting the commodity. Mr. Montefusco, thank you for joining me. Can you shed any light on the reasons behind the sudden plunge and the most recent rise?
As you say, look, the oil price had been fairly firm until a couple of days ago, yeah? Now, on that day in particular, it, like you say, it shed probably $3 in a matter of seconds, really. What we did have on that day was an option expiry on the WTI contract. Okay, so a lot of people were liquidating positions. It was first thought that it may have been an error, or what you call like a fat finger error, where someone might have hit the wrong keys on the electronic trading terminal and triggered a spiraling price decline. But usually, if that does happen, once you've seen the big down move, you'll see it come back pretty quickly if it was an error. But we seem to think it was a matter of, one, the liquidity at the time was fairly thin because it was a Jewish holiday too, plus the expiry. So if people were exercising options, you probably maybe selling futures to neutralize the position. Also, as that started coming off, there's a lot of what's known as technical stops, where particular levels in the markets are reached and sell orders are triggered. So that occurred, and there were also currently at the time there were mutterings of a strategic petroleum reserve release from the US, but that did not occur. But that's quite a few of the reasons why it went off pretty quickly. And there may be a few investigations by the CFTC. And obviously today, we rebounded early on in the morning because of overnight Bank of Japan released more stimulus to the market, but virtually following the Fed with more asset purchase buying. So that's more quantitative easing. And that got the market fairly buoyant first thing this morning. But sort of mid-morning, we're starting to fall away again, as you can see now.
There's been a lot of debate over the price of oil. Investors have been focused on the turmoil overseas, particularly anti-American protests in Afghanistan and Indonesia. How will this tension affect oil markets and prices?
Well, high prices are not conducive for recoveries in global oil. So yes, there's quite a few concerns around. The oil markets have been relatively tight as they've recently, as there had been a lot of sort of geopolitical problems, which we've seen before with Syria, with Libya, with Sudan. Obviously, the big concern was in Iran, where when the sanctions started in July, obviously losing 2-3 million barrels there. And quite recently, obviously, we have, like you say, we have a lot of problems with these anti-American protests. Now, we're not actually losing any oil over it, but it's the events that could lead to the problems in the Middle East. So, people are wary of what's happening out there, but we're actually not losing any physical oil just yet, but it's perceived that there could be if these tensions continue to rise. But like you were saying, also the Saudis have muted that they are willing to produce extra barrels and sell extra barrels to some of their Asian customers too.
What effect did the Federal Reserve's announcement of more QE have on commodity prices, especially in oil?
Oh, yes. Well, it had a very big effect. Obviously, when that came out, the markets were very strong immediately. I think the knock-on effect from the commodities with oil and metals is that you saw the euro jump quite dramatically. And with that euro hitting up to 131 and the dollar being weaker, it tends to make commodity prices that are priced in dollars cheaper. So hence there you have a buy, you trigger a buying wave of dollar-denominated commodities as well. So you've seen not just only oil being purchased quite heavily. You've also seen it in metals and agriculturals as well. But oil is obviously fairly tight, but you know, when there's more free money away, it's sort of thrown at these markets. You know, people look to where the value will be for new assets, and we see a lot of that coming to commodities with the funds as well.
Lastly, what do you expect to see from oil prices in both the short and the long term?
Well, right now the markets are still fairly buoyant. If we look at the Brent price, you know, it's currently around sort of $111, $112. Yeah. Now that sort of, you know, when we saw it spike up to 120 earlier in sort of March, April, I don't think we'll be hitting those sort of highs right now, unless we do have these supply shocks, and you know, with tension in the Middle East, we've got to keep an eye on what's going on with Iran as well, when particularly with Israel, Netanyahu ratcheting up tension there, and obviously they want the Americans to act sooner rather than later. So the market is fairly firm. On the, you know, it tends to be very well supplied at the moment. Now, obviously, with this QE coming into the markets and these tensions, we're going to remain fairly high. But I mean, if you currently look at where we actually stand in global economies, the oil demand is not that high. So the oil price should really be heading towards $100 again, to be honest. So going forward, with no supply shocks, and you sort of take out the Middle East tension, then we should be coming lower, down towards $100 and lower again. It's only that that's what's keeping the markets fairly buoyant at the moment, is that we do have these tensions, and there's a lot of money being thrown into the markets. But if you break it down to supply and demand, then longer term we should be coming down towards 100 again.
Mr. Montefusco, thank you for joining me today and giving us a great insight into the commodity markets. For more interviews and updates, just click back to the Dukascopy website, but for now, take care.